Welcome back to Wall Street Confidential. I'm Alex Steele, joined by Jim Cramer. So, Jim, should we be watching Bank of America as a proxy of the market?
Well, I'll tell you, Bank of America today has already had a reversal and going up. Let me tell you why Bank of America is so important. Bank of America has taken the most risk of any bank. They bought Merrill at what everyone now acknowledges is a very high price. They bought Countrywide without recognizing that the servicer business has become very bad. They had the giant deposit base that made us feel that they were the safe one to buy, and yet they hit a 52-week low. Now, when people are trying to worry whether we're going to go back to the October lows for banks, or the November lows for the market, we have to key on certain stocks, and there's nothing like keying on the big Dow stock that is considered good. I mean, no one considers Citigroup a good company, but until this decline, people respect tremendously Bank of America. So I always like to figure out which stock in any given market is the key. For a long time it was Google, then it was Research in Motion. For a long time it was, in the 90s it was Pfizer, in the late 90s it was Yahoo. I mean, 2002 it was Cisco. The market, you need, if you were to call in on the road and say, how's the market? That would be somewhat valuable. If you call in and said, how's Bank of America? That would be the key. So what I am not saying is buy Bank of America or sell Bank of America. What I'm saying is that given all that is bitten off and all it has to chew, and how much it's related to housing and how much it's related to the mortgage market and to also corporate credit, commercial credit, Bank of America is the key to the stock market.
And doesn't 2009, though, look really grim for Bank of America? We're hearing more about dividend cuts. Clearly, Obama's not going to be a friend to big banks.
No, he's not. We saw that from the TARP letter yesterday. Well, I mean, how did Bank of America get to 10? I think it's because everyone's thinking bad things. I mean, I'm always continually amazed. It'll be like there were rumors today of Bank of America and JP Morgan reporting big losses. This reminds me so much of Goldman Sachs in the 60s, where every day I was coming out and saying, they're going to lose $5 a share, they're going to lose $5 a share. And everyone's saying they might lose $2, they might lose $2. Well, sure enough, they lose $5 a share. What happens? The stock then rockets 25 points. Because I was using the whisper number, 5. I think JP Morgan and Bank of America are going to lose hideous amounts. And if you are concerned about that, you ought to sell. I own JP Morgan for ActionAlertsPlus.com because one of the reasons why it's gone from 40 to 25 is they're going to lose hideous amounts. So I don't believe the market is as stupid as people say, and that it's revelatory that JP Morgan is going to lose a lot of money. So when it happens, there's arguably a chance that it goes higher, not lower.
All right, thank you so much, Jim Cramer. And of course, JP Morgan is owned in Cramer's Action Alerts Plus portfolio. And to see what else he owns, you can email us at action@thestreet.com for your free trial.